a nonprofit qualify as an income producing property?
You know, I understand that there are ways that those tax credits can be sold. And developers have done that, where they're able to, put together a package and then actually sell them so that nonprofits are able to benefit. There's also a federal tax credit at 20%. And this is again for income producing properties, so a private residence would not qualify. And this time it has to be listed or eligible for listing on the National Register and must follow the Secretary of Interior standards for rehabilitation on the work that happens on the property. And this one does require more review. In fact, there are 3 different entities that review it. The state reviews it, the National Park Service, and the IRS. The project has to be at least $5,000, but the amazing thing is there's no cap on the ceiling of what you can spend. So you think of this, it's a 20% discount on rehabilitation of historically designated income producing properties. And the tax credit can actually be carried forward and it can be carried back as well. So it's a pretty amazing benefit for properties like in Old Town, Nevada. They would qualify for this kind of tax credit.
Does everybody understand what it means to carry it forward? In other words, if you can't claim the whole credit in one year, you can claim part of it and then go on the next year to claim more of it until you capture the full
Yeah.
amount.
And then there's a state income tax credit for Colorado. And so we're one of the lucky states that actually has a program such as this. And again, it's a 20% credit on rehabilitation projects. There is a minimum cost of the project of $5,000. And on this one, there is a ceiling of $250,000 at the property level. The good news is if you're designated at the state or local or national level, you don't have to be a commercial income producing property to take this credit. So folks that live in Reno Park and Stockwalter would be eligible for this tax credit. And it's a really wonderful credit in that there is a review process and you have to follow, again, standards for the work that you do. But, you know, it's kind of like getting a discount of 20% on the work that you do. And you have to own the property or be a tenant for 5 years, and if you aren't, then the tax is prorated. There is a fee for this. It's a $250 application fee and then a sliding scale based on the dollar amount of the work that's done, and that maxes out at $750. So the return on your initial investment is pretty good for pursuing the state tax credit. And here are some examples of what the allowable costs are for the state of Colorado income tax credit if you do live in Reno Park or Stockwalter. And for those of you that have ever owned a single family home, you know how expensive these types of items are. So it's really a great program that we have in our state. There is one caveat that if the state is running a deficit, which we will likely be doing in 2011, then you can't take the tax credit in that year, but you can roll it forward, and it can be rolled forward for a period of 10 years. And when you look at it, based on what we all pay in state income taxes, and the fact that if you max it out and do $250,000 of work on your house at 20%, $50,000 tax credit, that means that for most people, they are paying no state income taxes for a period of 10 years that they own the property. And of course, there are costs that are not considered qualifying for the tax credit. And it makes sense. You know, the state is not going to give you a discount for doing things that are purely cosmetic or maintenance, or hey, I didn't like the color of my house, so I'm repainting it. So, you know, there are some checks and balances to the system. Another benefit of designation, it is that you are oftentimes eligible for grants. And one grant program that we are very lucky to have in the state of Colorado is the State Historical Fund. And I don't know if any of you make the trip up to Central City or Black Hawk or Cripple Creek and pull the lever of the slot machine or throw the dice, but it is the gaming tax revenues that fund this fund of money that then grants are issued from. And the types of projects that are eligible for grant money include restoration and rehabilitation of historic buildings, architectural assessments, archaeological excavations, designation and interpretation of historic places. So if you wanted a plaque program or something like that, you could submit for a grant for that. Preservation planning studies and education and training programs such as the one we're running now. It is a competitive process. Kim can tell you just how competitive it is. I think that at this point, maybe 1 out of every 5 grants has been funded, if we're lucky. So it is a competitive process, and projects must demonstrate great public benefit. So you could apply for a grant if you know, for your own private residence if you want, but you just have to keep in mind you're competing against, other entities like schools, you know, with great public access and that kind of thing. So it's very difficult for the owner of a private residence to get a grant from the state. That said, we've seen it happen before. It just depends on how compelling that grant and application is and how much public benefit there is to the community if you were awarded one. The grants vary in size. Here I'm seeing a few $100s. Quite frankly, given how tough it is to write a grant application, no one's ever gonna write one just asking for a couple $100s. It starts at a couple $1,000s and goes up to hundreds of thousands of dollars. And I would also be remiss in terms of not mentioning a benefit of designation being that the City of Nevada, as well as your Urban Renewal Authority, have invested a lot of money in public improvements and streetscapes in the National Register districts, namely Old Town Arvada. Changing gears a bit when we talk about the benefits of designation, it's been well documented over the years the economic impact of designation on property values, and bottom line is historic designation does not decrease property values. There was a study done in the state in 2002, and then it was updated in 2005, and in most cases, the properties in historic districts increased at a faster rate than comparable properties surrounding. In worst case scenario, they stayed the same, that the appreciation was equal in the historic districts and outside. The National Association of Realtors, who has a vested interest in this, has found that any time there's historic designation that the property values increase. And lastly, the Old House Journal did a study a couple years ago and found the same thing. And their conclusions that they drew were that buyers are attracted to historic districts because you have assurances. It acts as a safeguard against tear downs, poorly maintained properties, overbuilding, and provides some assurance of the neighborhood's quality and condition. And we've certainly seen this in Denver. We actually have realtors in Denver that have done their own analysis, and several of them are finding that it's about a 10% premium on what a property is valued at in a historic district versus surrounding the historic district. Another benefit of historic designation is that it contributes to heritage tourism. And living in Colorado, we know how important tourism is to our economy. And we know it's not just ski towns that are benefiting from heritage tourism. And it is a growing industry in our state, and 8 out of every 10 adult travelers incorporate some visit to a historic or cultural site into their trip, and they actually stay longer and spend more money than other tourists. And heritage tourism, as we're finding, is a popular, or a powerful tool to bring together economic development and preservation, as you see in Old Town Nevada. It contributes to our economy by generating revenue, creating jobs, as well as providing opportunities for small businesses. Rehabilitation projects also contribute to our community in that those dollars stay here. When you think of it, preservation projects are labor intensive as opposed to material intensive. So the labor is typically skilled labor, so those dollars are staying in the community. A lot of money isn't going to buying materials that are being shipped in from around the world or other parts of the country. And it does provide jobs in our community as well, and reduces the amount of materials going into landfill.
Since the preservation ethic began to really take root in Colorado, it's helped sustain a whole cadre of trades and crafts professions, particularly the State Historical Fund doing that. And that, again, is good for the local economy, and it's also helped preserve these building traditions and skills.